Welcome to Nasdaq Trade Talks. I'm Lyanne Alfaro, supervising producer here at Nasdaq with the daily insight on the Nasdaq-100 index, or the NDX, which is made of the 100 largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and is also one of the best performing indices over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this afternoon for an update on the Nasdaq-100 performance is Ryan McCormack, QQQ equity ETF strategist at Invesco. Ryan, thank you so much for joining us.
Hey, Lyanne, thanks so much for having me.
So let's kick off by talking a little bit about where we are today and kind of looking through the sectors for the week. Now, we know we've had some negative sentiment because of the rising coronavirus cases. Talk to us about the impact.
Sure. So you're absolutely right. I think as you're looking at some of these worries about kind of ramped up coronavirus cases, particularly in Florida, Texas, Arizona, among other states, right? I mean, it's almost like that fear of the second wave is already here. So, certainly that negative sentiment weighed on markets. QQQ did outperform the S&P 500 for the week. Q's down 50 basis points versus the S&P, which was down just shy of 1%. So clearly, those concerns are weighing on markets. Year to date, however, QQQ has maintained, significant outperformance, up 16.81% for the year versus S&P, which is down 3.09%. So we're looking at 1,990 basis points of outperformance, which is pretty staggering. Beyond that, the fears of coronavirus, we've had kind of mixed economic data. Last week, the third reading of first quarter GDP came out unchanged, showing a 5% quarterly contraction. At the end of the day, I think the second quarter is going to be the one that's most telling as we look at a lot of those, a lot of the measures that were implemented, including quarantines, including shutting down businesses, et cetera. The bulk of that really took place in the second quarter. So I think what will be most telling is as we start to see that second quarter GDP data come in. But beyond that, you have initial jobless claims for the weekend of June the 20th declined. That's the 12th consecutive week of initial jobless claim declines. Kind of a double-edged sword there because it still came in at 1.48 million. Which is significantly higher than the previous all-time high back in October of 1982. So, again, investors still kind of hanging on to coronavirus headlines, and as we start to see the economic data trickle out as to what the real effect from coronavirus was, I think it's sort of yet to be seen.
Absolutely. And now as we look at the breakout by sectors here, what are some observations we're seeing here?
Yeah, so the sectors, it was a pretty healthy mix here of Q's overweights versus Q's kind of no weights that contributed to the relative outperformance for the week. Two of the largest overweights in the fund, consumer discretionary and technology, both were in positive territory. And as you look at those sectors within SPY, they were negative for the week. So not only was the overweight to the positive returning names within those sectors in QQQ helpful, but the mix of the sectors themselves actually showed differentiated returns again because they were positive, whereas in the S&P they were negative for the week. Beyond that, you had financials down over 2.7% for the week, energy down close to 3.7% for the week. Those are two of the sectors that QQQ does not have exposure to, so certainly helped on that front as well.
Definitely. It's something to keep an eye on as we track the return to some kind of new normal and the rising coronavirus cases. Ryan, thank you so much for your insight and for joining us here on Trade Talks.
Thanks so much, Lyanne.
Nasdaq followers, please stay tuned for more coverage coming to you right here from the Trade Talks channel and at Nasdaq.